Okay, folks, welcome to Best Stock Charts for the New Trading Week. This is Bob Desmond, and what we're going to talk about today is opportunities that are out there in stocks that are extremely oversold, and we're going to define what that is, and we're going to talk about the parameters, the processes for as to when you want to buy these stocks and how you would buy these stocks. And I have a PDF infographic linked below. You can have it. You're looking at it right now in front of you, as a matter of fact. All you need to do is enter your email address below. We hate spam too. It'll be sent right out to you. You have it within the next minute. So let's talk about the process first. Then we're going to talk about the stocks that I like on the charts, at least on a daily chart. So we're going to talk about the reasons as to why they're on our list of stocks to trade. But that doesn't mean we're going to be going in on Monday morning ready to buy them, because they're not ready yet. So let's begin. The process of buying extreme oversold stocks, 7 steps, 7 primary steps. The obvious one here first, folks, is that you got to make sure that they are not going out of business, right? So you have to do your research. And I have some notes next to each one of these names where I have a little bit of concern, not immediately of a concern, but down the road. It will be a concern if these shares continue to drop down below historical support. Right now, I think that we're setting up for some decent trades here as the markets become unwound, because these names have been unwound for a while now. Let's get to it. Step number 1, scan extreme oversold stocks. TrendSpider is our preferred scanning vehicle for these types of names. In fact, most types of trades that we like to scan for, we use TrendSpider. There's a link below. Get your discount to them. Right now, they have a 2-month free offer. So if you use my discount code, CON35, you may be getting a 35% discount code plus 2 months free. Take advantage of it. Link below. All right, so step number 1, scan extreme oversold stocks. TrendSpider preferred. Scan on a daily time frame. This is your qualifier, daily time frame. You can use other time frames, but we like the daily time frame. RSI must be below 19 on a closing basis. What does that mean? It's not an extreme oversold stock simply if the stock is trading down below 30 or 20. It's just not that extreme yet. We want to see stocks that are really beaten up down in the mid-teens. If a stock is trading down below $5 per share, you could easily see an RSI down below 10. Step number 2 of the process is that you do like the trade, you must not go buying all of your position, all your intended allotment, all in one shot. Hypothetical, you want to buy 1,000 shares of XYZ stock. Your first tranche of buying ought to be 250 shares max, because you want to make sure that you are buying at historical support. You're going to hear me repeat this over and over again. You must make the assumption that your first round of buying is going to be inaccurate. You're going to be wrong. You're going to be too early, because I use this phrase, weak stocks tend to get weaker, strong stocks tend to get stronger. It's all about the momentum. Step number 3. Average down volume below average. So your average daily down volume should be descending, not ascending, and it should not be above average. If you see your volume above average and especially rising, well, that means you have too much institutional distribution, and you do not want to fight these guys. We are the small money. These guys are the big dogs. Do not get in front of that tsunami of selling. Please avoid it. You will get trampled. Step number 4, never buy before 3:30 p.m. Eastern Standard Time. Why? Because many of these stocks, they'll have been beaten up in the final hour of trade the prior day. What does that mean for the next morning? Well, they're oversold, and then they bounce. And then they look good all day long, and you're sitting there chomping at the bit. You're saying, man, this has got to be it. This has got to be it. This stock can't go down anymore. RSI down below 20. This has got to be the bottom. Until, of course, at 3 o'clock, 3:30, all of a sudden, the sellers move in, and they start walloping the stock again, day after day, week after week. Don't let that be you. Don't let chat rooms or message boards take parking space up in your head. Use the rules that I'm laying out here and you'll be okay. You got to follow the rules. You're playing a very profitable game in somewhat of a risky market if you're not obeying the rules. I started the Contrarian Trader in 2005 based upon these rules. I learned the hard way. Follow my example. So by waiting, this is a typo. I have a bit of a typo here, so forgive me, I need to correct that. By waiting until the end of the trading day, you avoid head fakes. If you can wait until 3:59, do it. Do it. Wait until that final minute of trade and execute them. By doing so, you'll know that if the shares have flashed a reversal bar and they're closing at the highs of the day off of historical support, well, then you probably have a bottom. Step number 5, always buy at historical support. This is non-negotiable. Trust me when I tell you, whenever I have broken this rule, and it's been a long time since I broke this rule because it was way too expensive, always buy at historical support. If there is no historical support, consider passing on the trade. You always want to buy where you have buyers of like mind watching the charts and looking to put their bids in right where there was prior support and or resistance. Because if you're fighting the big money and they are selling stocks, well then, you want to make sure that you are joining arms, locked arms with buyers of like mind to help push back against that big money, which ideally, if it's hitting historical support, that big money has already been out of the stock. And now all you're seeing is just the final drips and drabs of those who just can't take the pain anymore and they're exiting. This is why we need the patience to stand there and say, okay, we hit support, declining down volume. We have a reversal day. We're closing at the highs of the day. Now it's time to act. Let's begin to leg into the trade. Another qualifier, is it a short squeeze candidate? If you have two stocks, all things being equal, I'm going to take a look at the short interest on both of those names because I want the one that's most heavily shorted because that's the stock that is going to give me a really big gamma event, a rip your face off short covering rally. That's where I want to put my money. The other name, while it's probably going to move up, you're not going to get the bang for your buck. So think about buying heavily shorted names. But again, to do so, remember, it's popular with the shorts. You need to obey all of these rules. Step number 7, the exit. These stocks are not investments. Please get that out of your mind that this stock is an investment. It could be down the road. Maybe this will be the bottom. But remember what we're doing here. We're trading an unsustainable downtrend, looking for a short covering rally. For all we know, this stock is going to rally and then roll back over after the selling pressure is off, and you're going to have a whole new round of sellers moving in, looking to either A, distribute the shares, or B, short the shares, taking them down below the prior support level. These are not investments. Not yet. If you see them rally, pull back on a weekly time frame, put in a higher low, and then begin to break out, then perhaps you have an investment. These trades are not investments, okay? Purely short covering rallies to a week, maybe 2 weeks, then out. Once RSI moves above 20 and into either A, resistance, must know your resistance level, use the automated trend lines on TrendSpider, link below, get your discount. And I give it away free to silver and gold level members to the Contrarian Trader, also linked below. Let me begin this again. Once RSI moves above 20 and into either A, resistance, or B, the 20-day exponential moving average, think about booking profits. You can use the SMA. The 20-period moving average is a little bit faster on the EMA basis. So think about buying right, buying by the rules, and then selling quickly on that short covering rally. You don't want to be the guy that's buying after the line crosses it back above 20 because all of a sudden your edge is poof, gone. So don't be that guy buying after the horse has already left the stable. Let's talk about our charts. Okay, before we get into these charts, I always like to talk about how our week was. Our week last week was awesome. It was a very good week. The only trade that that hurt us is that we put a long trade on nat gas, which looked good going into the trading week. By the end of the trading week, while it closed up on Friday, it had a really rough Wednesday and Thursday. So that kind of hurt. But otherwise, all of our other trades, we booked profits on our Tesla trade. We rolled down calls on our Strangle on Amazon. Our small account, let's go to that. Okay, so this is our small account. We opened up this account. I deposited $20,000 back here on August the 11th. The account is now up since that point in time, 8%, a little over 8%, $1,605.09. Now, I was asked more than once already, have you had a losing trade in this account? I don't even want to answer I'll answer it. No, we haven't had a losing trade, but we haven't had that many of them. The reason why I do not like answering that question is because it puts a stigma, it puts a shame on taking the loss, and that's bad. Taking a loss, a small loss up front, and recognizing the fact that you didn't make the right decision on a trade, that's a good thing. That's not a bad thing. So yeah, right now, we haven't taken a loss in 4 or 5 trades already, but that doesn't mean I'm not going to take one. So no, we haven't, but that shouldn't be the benchmark of how well you're doing. In the end, it's what's your P&L? What's your P&L? Your P&L is going to dictate whether or not you are taking large gains and small losses, or whether or not you're taking very small gains and very large losses. So right now we're doing very well here. I'm very pleased. We haven't had many trades because I saw the market begin to go off of a cliff. And I said, you know what, let's go a week and just let things start to either A, stabilize, or B, fall apart. They began to fall apart. So at current, we are short in this account using what you call a call spread, a credit spread, meaning we are short of Meta right now. And that's roughly 50% of the account. The other 50% is in cash right now. And I feel comfortable with that. So Meta, which broke down below that $300 mark on Friday, should continue to see lower lows. So once it does begin to do that, and it breaks down on a weekly time frame, we'll roll that trade down and we'll be short of Meta, but I call it shorting using an over-the-horizon method of shorting rather than just buying puts or shorting the shares outright. You don't want to do that in a small account because you can get a really bad rip-your-face-off rally, and that'll hurt you. By trading a deep out of the money, selling a deep out of the money spread with a roughly 85-90% probability of profit, well, you're keeping your capital protected. You're taking small wins, singles, doubles, singles, doubles. You're not looking for the home runs because if you go looking for the home runs, you run the risk of blowing up your account. We don't want to do that. We're happy with incremental gains, just like this chart shows here. We enter trades, sometimes they pull back, and then all of a sudden they recover. They pull back, recover, pull back, recover. That's what this account is all about, building wealth with a small account. Enough of that. Let's go to the trades that we want to look at going into the new trading week. And I have a bunch of them, but what I'm going to be doing with the top 5, I'm going to be entering them in the members area. I'm going to be entering entry points. What are our historical support levels at which we are interested? I will be talking about price targets. I will be talking about stop loss orders. They will be on the Contrarian Trader members dashboard for price targets, entry points, stop loss points, etc. So members, check it out. And tonight on Sunday Night Futures Live, I'm going to be talking about the monthly historical support levels on these names. So join us 6 p.m. Eastern Standard Time tonight on YouTube. I will be streaming on Twitter if you want to watch there. That's fine. But right now, we're just going to go over the qualifiers. Daily, extreme oversold charts, what we're looking at, why we like them. Let's go. First up, Dollar Tree. I love this store. The problem with this store is that they have less than $600 million in cash, yet they have $10 billion in debt. Think about that. That's why these shares are getting beat up. They need to roll over that debt from low interest rate to high interest rate. And it's not a cheap stock. It's sporting a 19 PE. The S&P 500 is 17 PE, historical mean. And retailers generally sport a lower multiple than your tech stocks. So this is not a cheap stock by any stretch of the imagination. It is not an investment. All we're looking for is a short covering rally. That's it. So let's talk about it. So Dollar Tree daily chart RSI at current is at 14.15. Very, very attractive. Down below here is short volume. Short volume, you could see, is dropping off. It was rising. It is now dropping off. Does that make it a buy? No, it does not. Why? It's simply because you have shorts that are not as aggressively shorting the stock. They're still in there. All you have right now is a buyer's strike. Nobody wants to step in and buy the stock. They're selling it right now. They may not be shorting it, but they're selling it because there is max pain out there. We're nearing a bottom. And you can see here on the daily chart, and this is only daily support, you have a couple of support levels immediately below. How do I know that? I didn't draw these lines. I use this. The automated trend lines on TrendSpider. Invaluable. We'll be using them tonight on a monthly chart and perhaps even weekly chart. So join us again, 6 p.m. Eastern Standard Time. Link below if you want to know about our 5 top favorite candlestick patterns. It's free. It's a 5-part video tutorial. You'll also get notified about 45 minutes prior to us going live on Friday nights and Thursday nights. Back to our show. All right, so we know that we have potential support down here at around $99.61 and down here at $96 per share. These are only daily support levels. I want to see monthly support levels, weekly support levels at a minimum. We'll talk about that tonight. So this stock is in all probability moving lower, and I would not catch this falling knife right here, right now. It's very interesting, but it's not time yet. And don't forget, if you want that listogram of the process, the 7-part process of entering these trades, please use the link below and get it sent to your inbox like that. The next chart, Square. Now, Square, you can see how these support levels, even though TrendSpider is awesome, and they tell you where there's historical support, it doesn't necessarily mean it's going to hold. But in this case here, on the 14th of September, if you would have bought the shares, had you had these automated trend lines on, you would have known you were buying into resistance. It would have known to avoid them. And given the trend, you probably would have shorted them. And you can see we broke support. We are moving lower. We have no daily support immediately below. We'll be checking out the weekly and monthly charts tonight. For support, RSI here is around 18.5. Volume is still heavy. It's above the moving average in blue. Short interest is still elevated, yet coming off somewhat, but it's still not time to buy yet, folks. We need to understand where we have buyers of like mind to enter the trade so that we do not get into this trade prematurely, because you must assume weak stocks are going to get weaker, strong stocks are going to get stronger. Next chart, Illumina. Now, I'm an options trader. This one here, I will probably be buying the common stock because these options from this history have shown me that they're very, very illiquid. So I'm not all too enthused about buying the options here, meaning buying a call spread, meaning that what that means is you buy an at the money or deep in the money call option, then you simultaneously sell a deep out of the money option, and that finances the trade. I may just need to buy the common stock outright, which is fine, but I prefer to have a defined risk strategy in, and that's what options provide you if you're buying them. And if you're selling them, that means it's an undefined risk. Meaning you're taking on undefined risk, undefined losses, and that's an option here as well. But you need to go deep out of the money by selling puts and probably put a deep out of the money call side on as a hedge. But right now, for simplicity's sakes, let's just say we're going to buy the common stock. We'll explore the options. It's been a long time since I tried to trade the options. Maybe the put options are liquid now. Maybe things have changed. We'll check it out, but in all probability, we'll be buying the common stock. So now, Illumina, we are nowhere near historical support on a daily time frame, and this is not on a weekly or monthly time frame. We need to take a step further back to help identify where there's been multiple experiences of this stock having support and resistance on a daily chart. This could be only one instance of it being a support level or a resistance level, not enough data. You got to take a step back. What I like to call a daily view is like the 5,000-foot view of the battlefield. We want to take a step back to take a look at a 25,000-foot view, a lot of history of the battlefield. A 100,000-foot view, that would be the monthly view. The 25,000-foot view would be the weekly view. And we want to view the battlefield from a very, very high perspective, like a falcon overlooking a pasture looking for rabbits, you know? And that's what we're looking for. Historical support, multiple times acting as support and or resistance. It doesn't matter to us, but all of them come into play as you begin to enter this trade from a risk-reward perspective. You want to identify historical support, leg into the trade, and don't stay too long on that short covering rally. RSI at current, 14 3/4. This can go lower and it will go lower. Volume is rising sequentially. You had Wednesday, Thursday below average volume. All of a sudden, volume picked up on Friday, and we didn't close that far off the lows of the session. What that tells me is that you still have distribution. Don't go buying the stock on Monday unless it's a massive gap down and you get a reversal day by the end of business. The next chart we want to talk about, Chewy. Everybody knows about Chewy. This was once a high-flying stock, no longer. However, I will say this about Chewy. I made a note here. Let's bring up Yahoo Finance. Okay, to begin with, as a qualifier, the PE ratio on Chewy is ridiculous. It's astronomical. Okay, 165 on a PE basis. Now, one thing you'll never find on my infographics or in my videos is referencing analysts. And right here, you can see they have a one-year target of 36.79. Ignore it. It's worthless. Analysts are worthless. Please do not listen to them. They have their own self-interest in mind, and rarely do they coincide with yours. What we want to take a look at are the statistics. And in this case here, what I like to take a look at is, are they growing revenues? Yes, check that box. What is their cash versus their debt? Well, their cash is greater than their debt. All of these other names do not have that. They have more debt than cash. So this is attractive to me. I can get heavy into this trade. Also, you could see that the shares short are 16.82 million. The average 3-month daily volume is 5.52 million. So that means that it's going to take roughly, let's say, 4.5, 5 days for a short covering rally. That's a multi-day short squeeze. That is very attractive to me. That is a catalyst for other traders to get involved, but always at historical support. Notice how I keep repeating that because it's so critical, folks. Please, I beg of you, always know where your historical support is before you start buying. So back to Chewy. Chewy is on a daily time frame sporting an RSI of around 14 3/4. They broke it down here on the 15th, down below. Again, the automated trend lines, awesome. But look what they're doing. They're limping it back up. There's no support down here with the exception of this volume shove, which they're hoping will hold. Maybe it does, maybe it doesn't. Well, we don't have enough information right now to see whether or not this volume shove has enough historical data to be respected, or is there a support level far more significant below? And I would hold off on this trade for now anyway. Join us tonight, 6 p.m. Eastern Standard Time, when we go over the weekly, monthly charts to identify better support levels, and we'll be talking about how we want to enter these trades. And again, if you're not a member, please consider joining up. 14-day free trial offer. If you like TrendSpider, join up silver and gold level memberships. I have a 14-day free trial offer. Get TrendSpider for free. If you're not ready to join the Contrarian Trader, that's fine. I get it. Follow me on YouTube, but at least get TrendSpider. Link below. Again, they have a 2-month free offer. And I also have, with my discount code, CON35, a 35% discount code. I don't know if they're going to honor both, but give it a shot. And this is what you do. Now, I need to open up the checkout in an incognito link because I'm already subscribed. They won't let me just go to the checkout page. But note here, 2 months free, right? And then when I go to the login, down here, enter CON35. So you may be able to get 2 months free plus a 35% discount code. Take advantage of it. Folks, thanks for being here. Join us tonight. Hope to see you there. And if you do join us tonight, please leave a message. You saw this video and you decided, hey, I wanted to join in and say hello. Please say hello. And we'll be doing members stock chart request. And if we have time, we'll go over your symbols as well. Talk to you then. Be well.